Welcome everyone to the Keeping Your Business Together in a Crisis live stream webinar series. This is part 10, Spending Your PPP Money. And this is about what we know now. So we did one of these sessions a few weeks ago, and now we're coming to you with the latest and the greatest based on last week of what's been put out for your forgiveness. This series is produced by the Boulder Small Business Development Center to support businesses in Boulder County as well as the rest of the state through our TechSource program. And we are one of 15 SBDCs in Colorado. Our center is hosted by the city of Boulder, and we're part of a great group of local, state, and national strategic partners that can help you during these challenging times. If you are located in a different part of Colorado other than Boulder County, like Grand Junction or Aurora or the Springs or Denver, go ahead and go to www.coloradosbdc.org. Jamie's going to repeat that at the end, but coloradosbdc.org, you can find the center closest to you to get support to help you with whatever you need. We're recording this session at 10 a.m. on Wednesday, May 27th. There is always a timestamp on our webinars. Because things change. They may have even changed since we dialed in at 9:30 to start talking about this. So you just never know, but pay attention to the time. Please note that we have everyone on mute, but I know a lot of you are dialing in with specific questions. So you can go ahead and enter those in the chat, and my co-moderator, Jamie Brandis, is going to be handling the live stream Q&A after Dan and Brian share their thoughts. Also, there's a recording. This is recorded, and we will send you a link to the recording tomorrow, and then you'll be able to listen to everything that we talk about. You can also find it at bouldersbdc.com. All of our webinars are recorded there. And at this time, I want to introduce Dan King and Brian Ormsby. They are both subject matter experts as well as entrepreneurs. So subject matter experts for the Boulder SBDC. They have done an amazing job at helping businesses on their own with their clients as well as with clients that have come to us for help with their SBA loans and financial assistance. Just know that this is not legal advice. So after this session, you may want to talk to a CPA or a lawyer, or you can also sign up for consulting with one of the Colorado SBDCs to get help, if you're stuck. So I know we have a lot to cover in a short period of time, and I don't want to take anything else away from Dan and Brian. So I'm going to say, thank you so much, and I'm going to turn it over, Dan, and turn it over to you.
Good morning. We are in this so much that I think that sometimes we forget where other people are in the learning curve and what they know about what's come out. So I want to take just a minute to recap where we are and what the most recent developments have been. 2 weeks ago on a Friday, the SBA released a loan application forgiveness form, an actual form document for the banks to use and for borrowers to use to apply for their forgiveness. That, of course, raised a lot of questions. Well, last Friday, they seem to like to put things out on Friday so we get to read them on the weekend. Last Friday, they issued further guidance on that form, which answered a lot of the questions, provided clarification on some of the things that we were still curious about, but didn't answer everything. And there's still some gray areas and loophole areas that we'll talk about today. But if you haven't looked at the application, you should, because you're going to need to fill it out. You need to start in the back of that application. You start with the worksheet and then work your way back up to the application itself. There's a number of different time frames that you can choose for to make some of these calculations, really quite a few different time frames. The only way you will know which time frame you should use is to run the calculations. So you're gonna burn the calculator a little bit and have to put together your information in a number of different ways, but you really need to look at every available time frame, figure out what works best for your business in order to maximize your forgiveness. I want to just start, we're just gonna public service announcement on the necessity of these loans. I think everyone has seen or did see a lot of press about some large companies getting these loans who maybe didn't really need them. There was a lot of focus on that by Congress and the SBA. I will remind you that in the application, you certified the following: that the uncertainty of current economic conditions makes necessary the loan request to support the ongoing obligations of the business. For most of us, that's going to apply. It's not anything to worry about. The SBA has pretty much specifically said that anyone who got more than $2 million should pretty much expect to be audited. But it doesn't mean you have a get out of jail free card if you got less than $2 million. If you have any concerns about whether your business really met this necessity test, it's good to seek professional advice and make sure you're comfortable that that won't be an issue for you at some point in the future if your file gets pulled. A quick overview. I'm going to start with happy news, and I'm going to put my game show face on, because behind door number one we have happy news. And if you're a business who really lined up well with this PPP program, which means you were able to keep your employees on, you didn't have to do layoffs, you kept everybody working, you pretty much paid everybody the same and maybe a little bit more, guess what? This is really easy to fill out. It's really easy to do the application. It's really easy to apply for forgiveness. And you should get 100% forgiveness if you can open that door number one. If you're a little bit on the edge of that, and maybe you did have some furloughs and it's a little more complicated, then you're under what I'm calling door number two, and you have to be a little more careful on your calculations. There are some safe harbors that the SBA has provided us, and some rules that have provided us that can actually assist you in getting full forgiveness, but you have to make sure you apply those rules appropriately and do the math and understand how they work. So there's some help for you there, but you have to know how to use it. If you're an owner employee, a self-employed person, or a partner, the rules are not going to treat you very well. And I'm sorry, that's door number three, and that's the door you're going to have to go through, and we'll give you some advice on that, but it's pretty restrictive how the final rules turned out. Again, door number one's pretty straightforward. You'll need to document well. Everybody's going to need to document well at the end of the day and submit that forgiveness application to their bank with good documentation in good order to make it easy for the bank to review. But doors number 2 and 3, if you're in one of those categories, you're probably going to need some advice like you're going to get on this lesson. You know, if you're going through door number 1, you can probably just go fill out the application and you're done with us today. So moving on, I'm going to let Brian start getting into some of the specifics, and we'll go back and forth on some of those things, and we'll take questions at the end.
Thanks, Dan. Yeah, so one of the questions that we had gotten several times in the past that they finally had some clarification on is how is your payroll being calculated during the 8-week period? So what they did is they kind of opened up 2 different avenues here. One is called the alternative covered period, where what you do is, and I'm going to just use some arbitrary dates. Let's say that you received your money on the 1st of May, but your regular pay cycle runs where you get paid on the 10th of May for a bi-weekly period, and then you get paid 2 weeks after that. So the alternative covered period gives you the ability to line up your reporting with your payroll recording period. Now there's a good and a bad to that. The good to that is it makes the calculation very simple. You basically pick pay periods that align up with that and use those. Now, in order to use the alternative covered period, you have to be bi-weekly or more frequent. So if you're paying semi-monthly or monthly, it doesn't apply to you. But if you're paying every 2 weeks or every week or some cycle like that, then you can use this period and it makes the calculation very simple. However, there was language in the original piece that talked about cost and incurred. And the clarification of that is that you can have cost and incurred So using the same example, if you got your money on the 1st of May and your pay period was the 10th of May, but that included some payroll or some time that was before the 1st of May, you can use that payroll on the 10th, and then the next payroll and the next payroll, and then when the 8 weeks expires, if there is time that accrues up until the 8-week day, you can include that too. So depending on how the timing hits, you could actually have up to 10 weeks of pay that's cost and incurred that you can include. So if you took the alternative covered period, you wouldn't get afforded that 10-week period. So with that, be really careful on how you want to calculate that. One, alternative covered period, if you're biweekly or more frequent, is very simple. And if that gets you what you need for forgiveness, then great. But if you're going to need maybe an extra pay period or something like that in order to hit the numbers, then maybe you should consider using both cost or paid and incurred during that. Okay, so let's talk a little bit about FTE computations and go into what goes on there. Now, so there's some of this that was also many questions on FTE, like what was an FTE? Was it 40 hours, or could it be as little as 30 hours, or that? So they clarified this, and 40 hours is the benchmark. It comes down to basically there are two methods, and in order to calculate FTE, like Dan said before, really you want to make sure that you come up with what works for you in order to make sure you get your FTE calculations correctly. So you're going to want to calculate probably both methods to make sure that you're hitting the numbers. So method one is to add up the average number of hours per week per employee during the designated period, and then divide by 40, and then round up to the nearest tenth. So if you came up with 3.75, it would be 3.8. And the maximum per each employee is 1 FTE. So if an employee has more than 40 hours, then that would have to be capped at 40 for that one employee. Method two is to basically count it by employee as employee. So you take each full-time employee, 40 hours or more, count them as one, take each part-time employee, and then count them based on how they qualify. So if they're 20 hours or less, they round up to a half. And if they're between 20 and 40, then they round up to a 10th decimal point of how that works. So if you're 30 hours, which would be 0.75, they would be 0.8. And you would add each one of those employees up to come up with that method. So that's how you're going to calculate the FTEs. There's some more information about how that works out in getting your FTE forgiveness portion. So we look at how we calculate the FTEs, and then we have to figure out how are we going to compare that FTE and whether that's going to end up being a penalty or a reduction in your calculation. And so this really hasn't changed, although there has been added, as Dan mentioned, a door number 2 option, so a safe harbor option. So as it was before, there's 2 periods you can choose from. February 15th of 2019 to June 30th of 2019, you calculate your average FTE of that period, or January 1st of 2020 to the end of February 29th of 2020, the average FTE there. Choose the one that's more favorable and compare that to your FTE count that you have calculated in my previous example. If your FTEs are equal or greater, fine, you can move on. If they're not, then we have to look at this safe harbor and see if that helps you. One of the things I also want to point out is that if you're a seasonal business for this base period, you can pick any 12-week period between May 1st last year to September 15th. So you're going to want to go through, if the FTEs is an issue for you, and pick the most favorable 12-week period and come up with the lowest base FTE. Again, remember that what we're trying to do is compare last year's FTE to this year and make sure that the number now is higher, greater, or equal to. So I'm going to get into safe harbor in a minute, but I'm not going to get into safe harbor because I'm going to let Dan cover that. And I'll just turn it over to Dan now. If there's anything I missed, I'll let Dan fill it in.
Sure. The only thing I would add to when Brian was talking about paid and incurred cost, and specifically in terms of payroll, he was giving good examples of how that works for payroll. But this paid and incurred works for all the other qualifying expenses too. So you could pay more than 3 months of rent, and you could pay more than 3 months of utility, particularly if you're paying in arrears. So if I had back due rent and I paid it in the covered period, I'm going to get to count it all. You may be able to do that for prepayments too. There's some lack of clarity on that. The language specifically says you cannot prepay interest, but it specifically doesn't say you can't prepay the other ones, and it seems like they would have. So, but certainly paying things in arrears, you can get more than 2 months of rent in your calculations if you pay it in the covered period and you need that, and utilities as well. Moving now to the safe harbor, you know, there's so many different time frames here that I kind of pity anybody out there who's trying to write all these down. They're in the document. I think the point to make here is you have to go back and do these calculations for every time frame you're allowed to do them in to figure out what's going to work best for your situation. So there's a lot of different computations, and then you get to choose. Once you choose, you have to be consistent, but you get to choose. So let's say for Brian was telling us the FTE calculation, and if your FTE quotient comes out to less than 75%, you're not going to get 100% forgiveness. That's part of the rules. But they've given you a safe harbor. And the safe harbor is basically if you return your FTEs to their historic count by June 30th, you're gonna get a safe harbor, and you're gonna be able to get 100% forgiveness in terms of this calculation. However, they throw in another calculation you have to do to get to that point. I'm tempted to leave that one alone. They're gonna give you 2 different time frames to make another FTE comparison. It's in the documents, you'll have to do that. If you pass that test, you can then say, all right, well, if I can bring everybody back by June 30th, I can get my forgiveness back to 100%. You have to document that you brought your FTE count back to June 30th. And the language is very clearly that your FTE count is back to its historic level on June 30th. Doesn't say anything about July 1st. It doesn't say anything about June 29th. It says June 30th. Now, I think our advice would be, in order to document, you're probably going to want at least one full pay period that includes June 30th, so that you can show your calculation of FTE for that pay period and give that to your bank as document that, yes, on June 30th, I was back to my full historic employment. But after that pay period, all bets are off. And if your FTE count goes down again, you passed the test, you cleared the hurdle, and you can take that safe harbor. There's an additional safe harbor here. And basically this safe harbor revolves around the theory that the business shouldn't be penalized for actions of the employee that impacts the business FTE count. And what that means is, I think we all heard this one before, if I offer to rehire somebody who I've had to lay somebody off, I offer to rehire them. If they refuse to take that rehire, I can count them in my FTE count. Now, I have to document it, and I have to report them to the unemployment division that they've refused to rehire. And it specifically says that you have to document that you report it to the unemployment office that they've refused the rehire. So we call that the NARC rule. You have to NARC them out. But so in addition to this rehire, if they don't take it, there's some other ones. If I fire somebody for cause and I can document that I had cause to fire them, then I can still count them as an FTE. If someone voluntarily resigns, then I can still count them as an FTE. If I rehire somebody during the period to take that position, I can't count them both. I still only get up with one. I don't get two out of that. But so there's some safe harbors there. If you fail to meet your FTE count because of the actions of the employee, there's some safe harbor rules there for you. Enough on that. Now we're going to go to, so that there's a couple different windows where you can get dinged and get less than forgiveness. And we've just talked about the FTE one. The next one is this whole calculation of salary and wage reductions for an individual employee. And so I'm going to let Brian talk about that hurdle you have to clear.
Thanks, Dan. Yeah, so this one, it gets pretty much in the weeds here. And when you're going through your application, and as Dan said in the beginning, you start basically in the back of the application and start filling out the forms, and then that will fill out the front of the application. So part of this is that you're going to put in each employee and you're going to put in what their wage is. And if their reduction in wage, a salaried employee, if their reduction in wage is greater than 25% or 75% or less of their original wage, then there is a chance that your forgiveness could be reduced. If it's not, then this is all moot to you. If all of your people are making at least 75% of what they were making in your base period, you're going to be fine. So how do you calculate that in real terms is actually fairly simple, but there are lots of ways to kind of get out of this and ways around loopholes in this system. So initially, you look at the calculations, it's very simple, and I'm going to use numbers that are easy to calculate. So let's say we had somebody who made $100,000 last year, and now you're paying them $74,000. Then that is 74%, and they would be subject to potentially a reduction. If they were making $76,000, they would not be subject to the reduction, and you move on. So if they're subject to reduction, now we have to talk about, are they actually going to be reduced? And is there anything we can do to get them out of that? So the rules in here talk about when is your average annualized salary wage and what period that is. What is the salary wage at different snapshots in time? And so I could go into all this, but I would encourage you to take a look at this and try to figure it out and calculate each one. So the annual average salary between January 1st and March 30th of 2020 comes into play here. So you're going to want to calculate that. But if you're in some number that's below 75%, then there are ways. One of the safe harbors is, do you recover them back to their wage by June 30th? This is really important because let's say on June 26th or even on June 30th itself, you restore them, you give them a letter saying you are back to your original wage, and then you start paying them at that wage. According to the guidance we have, that's good. You will not get penalized because you've restored them to the wage and you've documented as such. Now, in the guidance, it doesn't say how long you have to pay them at that wage. Do you pay them at that wage for a day or a week or 2 weeks, or do you have to prove that that's continuous? We have no clarity on that. Right now, as it appears, seems like you could pay them at their salary for a day and you would qualify. However, I don't know if we're going to get additional clarity in that area. So that in general is a safe harbor of that particular thing. So if you have people who are in that less than 75% group, please study this area and contact Boulder SBDC if you need more guidance. I could sit here and talk about this one all day long. The second point of this is if they're non-salaried employees. So the number of non-salary, when I'm talking about hourly employees, is based on the hourly rate, not the number of hours. So if you're paying somebody $20 an hour, just because you cut their hours in half does not mean that they don't qualify for the 0.75. It's only if you reduce their rate to 75% of 20. So reducing someone hours is not a ding here. Reducing their rate of pay is. So consider that if you have hourly employees. So another thing that can be considered in here is bonuses and commissions. So it kind of allows you to pick a period in the previous year if you are looking for a safe harbor. So you could in fact go back and pick a period that includes a bonus that would annualize them to a different number. So let's say you have an employee that is making $50,000 a year, but you have a period in last year where they received a fairly large bonus. If you annualize that short period of time, you could in fact, at least we believe from the information that we have, calculate their annual pay based on that short period of time. It would be over $100,000, and then you could take them out of the equation. So there may be some more clarity on that, but right now it reads as if, I can take this period of time and calculate them, and if I can annualize their salary by dividing it by to make it into a 52-week number, that if all of a sudden it looks like it's more than 100K, then they're no longer part of that group that can be reduced.
Yeah, and I'll just throw in there for those of you who might be looking at the form, or when you go back and look at the form, this $100,000 cap really ties into, there's two tables on the worksheet. In table 1, you have to list everyone who made historically less than $100,000. And for each one of those employees, you have to do this test. Did I lower their wage by 25%? Table number 2, you list everyone who made $100,000 or more. And for those employees, you don't have to do this test of a 25% reduction on an individual basis. They're excluded from that calculation. So there may be reasons for you want to qualify people as $100,000 plus employees as opposed to under $100,000 plus employees. Brian did mention that calculation could involve bonuses or commissions that were paid in a certain pay period. I would just add that bonuses, hazard pay, commissions are also eligible for forgiveness during the covered period. So an option that avails itself to you is if you're close to making your 75% total wage payments, close but not there, you could very well consider giving out a bonus, a hazard pay bonus, a commission, a thank you gift certificate that you can run through payroll and make them pay taxes on, but make sure they get it as a taxable wage. Those things will qualify, and except for door number 3, which we're going to now, our owner employees, there seems to be no language that limits what that bonus or commission can be. We've advised people to be reasonable, and I think that's still good advice to be reasonable, but there's no language saying that you have to be reasonable. So I will leave that to your own judgment, your own interpretation. So now I'm going to get to door number 3, and this is for our owner employees, general partners, self-employed taxpayers, independent contractors, and the language is not kind. In terms of calculating what amount you can use for forgiveness, you are limited to what you made in 2019. So what you made in 2019, annual, they're divided up for an 8-week period, is the maximum amount you can claim, unless it was over $100,000, then you're limited by the $100,000 cap too. I really, there's some real pain in this one, and I think it misses the point. There are some people that this is probably fair for, and is going to work out all right. But I know many owner operators who have, as owner operators, Brian and I have business. We always underpay ourselves because we're working for the future. Hit yourself on the head sometimes. But I know a lot of owner operators who have, during this period of time, have stepped in and have taken on operational duties that they had not performed before, and we're doing that in good faith with the assumption that they could take salary for those duties that they were performing. Well, this language prohibits that from doing it, and it seems very clear that it does that. Whether there'll be further guidance on this, we don't know, but certainly for now, the language is clear. I've been listening to a lot of webinars, and we're trying to stay up to speed on this. If you are an owner employee who falls into this bracket, you're really going to need to get some help to see what you can do. And there may be some ways to lighten this burden in terms of the amount you're going to get forgiven. I'm going to put this out there, so it's a thought in your mind, but certainly you'll need to seek qualified advice. I listened to a national tax attorney who has a theory that for owner employees, they may be able to start and fund a retirement account during this 8-week period, put 2019 money and 2020 money in that retirement account, and use that towards your forgiveness. I've gone back. I think I know where they think that loophole is. It involves reading footnotes, and it involves reading other sections. Whether it's a good loophole or not, I don't know. But as with this bill, as with any tax bill, loopholes are where big attorneys and big CAP firms can make their money, but can also save their clients money. So if you're an owner employee and this is going to impact you directly, you should get qualified counsel to look at this with you. I think that's the end of our prepared statements. Brian, anything you want to add that you think we've glossed over or missed before we go into questions?
No, I was just going to say that, for owner operators, generally you fall into two categories. One, you're doing a Schedule C as part of your tax return. The other is, if you're a partner, you're doing a 1065. And that would be the two types of employees we're most talking about. So the guidance initially said that it would be based on Block 31 on your Schedule C and Block 22 on your 1065, which is basically what your net ordinary income or loss is. We have heard since then that if you're taking certain types of accelerated depreciation, you'll be able to back that out of that number to come up with the actual non-depreciated number. But that's what you're looking at. So when you look at your tax forms, look at Block 31 on your Schedule C, or if you're a partner, Block 22 on your 1065. So yeah, that was the last thing I wanted to add. I think we can probably open it up because there's probably a zillion questions out there, and it gives us still about 25 minutes for questions.
Great. Thank you both so much. I think this is helping to answer a lot of the questions I'm seeing come in. I think did get answered in the presentation, so there might be a few that I'll just have you reiterate. But I know some people were having some audio issues with the presentation, so I do apologize for anyone who experienced that. I believe they were fixed on our end, so we will have this recorded, and you should be able to hear those sections, I'm hoping, because we could at least hear it on our end. So again, I do apologize if you missed some of that. So let's get to some questions. The first one is asking for more clarification about the and or that you mentioned at the very beginning. So they're saying that they've changed the wording from and to or for incurred and paid for payroll, but they're wondering if that's true for other qualifying expenses as well.
Yes, yeah, it is. It's true for both. So what happens with payroll is if you select the adjusting reporting period, in other words, if you align it with your payroll period, if you're biweekly or more frequent, then payroll would be locked to that period, and you would only be able to use the alternative covered payroll period. But for other costs, the paid and incurred applies.
There's some, and you'll see this when you read through the guidance, this alternative covered period will only apply in most cases for your payroll calculations. You will still have to honor the original covered period for your other expenses, for your rent, utility. So the form is very clear on when you can use alternative and when you have to use the original definition of covered period. But just to be crystal clear, I have a small business I work with, and we received our money on or about the 7th of May, and I paid my May rent on the 8th, and you know what? That's all going to count because I paid it in the month. So I'm picking up only 7 days in this case. If I had not paid the month before, if I had not paid April and I had paid it in the covered period, I could count that too. Now that might get to a point where people think it's unreasonable, and so if I hadn't paid 6 months, if I was 6 months in arrear on my rent and I paid that all in the covered period, could I count that? The answer is yes. The SBA speaks to why they don't think that's a problem. And the reason they don't think that's a problem is because those expenses are limited to 25% of the total amount of the loan. So they think no matter how many past rents you can pile in there, at some point you're going to be capped because you can only use 25% of the loan for those types of expenses. But the clear definition is it's infinite. If I was a year late in my rent and I paid it all in the covered period, I could count that. But I'm only going to be forgiven up to the point where it reaches that 25% amount of the total loan.
Okay, thank you both. So this person is saying that their number of employees changed for them constantly during the last year. So I'm wondering what the FTE would be based on, what prior period, and how are they supposed to prove how many hours the employees used to work?
Well, that's a good question. And so there are periods of time where you are allowed to use as your baseline for FTE. And then during those periods of time, it's the average FTE during that time. Now, if you are not keeping time cards or something like that, then you would have to use payroll data in terms of how much you pay somebody to determine FTE. So, it comes down to your base periods, which is February 15th, 2019 to June 30th, 2019. What's your average FTE during that period? What's your average FTE from January 1st, 2020 to February 29th, 2020? Calculate both of those. You use the one that's most favorable. And if you're seasonal, any 12-week period, so it's got to be 12 continuous weeks from May 1st to September 15th, and you can pick any 12 weeks to calculate the FTE during that period. But it is the average in those periods would be your base FTE.
And let me add a little more detail that may help this person. So let's take the 2-month period. I can choose which base period I want to use. Let's take the 2-month period that's January and February because it's just 2 months. Let's say I had somebody who was working 20 hours a week. Well, if they work that whole 2-month period, they would be half an FTE. Now let's say they only work exactly half of that period for 20 hours a week. Well, then for the course of that 2 months, they're a quarter of an FTE. So you almost have to calculate their hours worked for the entire length of whatever base period you're picking, then calculate what 40 hours per week for that base period would have been in terms of hour, and that's the division problem that you're going to solve to figure out what percentage of an FTE they were during that time frame.
Okay, so there's some questions about seasonal businesses and how those are actually considered. So I don't know if you have more guidance on what would count as a seasonal business.
The definition of a seasonal business, I don't know.
Yeah, it's the first time I've been asked that question. Yeah, so I don't know the answer.
I mean, I'd have to look that up, what a seasonal business is, and I don't know that I remember seeing that. From a calculation standpoint, we know the answer, and from the calculation standpoint, Brian gave you the range, but you can look it up. It's hard to write down, but they changed it when they originally came out. They had a very specific time frame that seasonal businesses had to use for their historic calculation of what their FTEs were. They did change that in one of their guidance, and they changed it to that you can choose any consecutive 12-week period that falls between May 1st of 2019 through September 15th of 2019. And the business gets to choose what 12-week period, consecutive 12-week period during that time frame they want to use to calculate what their FTE count was. So again, this is one where you have to look at the data and choose the 12-week time frame that is most favorable to you.
Okay, I'm assuming this one depends on the bank or the lender, but they're asking how many weeks do I have after I use all my PPP money to send my forgiveness documents to my bank?
I don't know that I've seen any limitation on when you have to get your information to the bank. Now, we have seen that the banks, once you deliver that information to the banks have 60 days in which to respond to you. And then the SBA has 90 days to tell the bank, yeah, you did it right, and we're going to give you the money back, Mr. Banker. But I haven't seen any specific limitation on how quickly the borrower needs to get that information in. I think our advice in general is going to be getting it as quickly as possible. There's a possibility that if you delay getting that information in, remember your first loan payment is deferred for 6 months. So if you now have, basically 2 months where you had the money to use, and now you're going to wait a period of time before you send that money in, and then the bank is going to have 60 days to make their determination. If you dilly-dally too long, you could end up having to make loan payments. You may get those loan payments back whenever you receive forgiveness, or you may not. So you should do it in an expeditious basis. But most people, that's going to mean a lot of people are going to have to wait till after June 30th anyways, because that's going to be a critical date in their calculations. But I think our advice would be do it as quickly as it makes sense for your business, but as quickly as you can.
Yeah, and to also add on to that, it's clear in the guidance that the request for forgiveness starts with the business who received the loan. Now, the banks will probably be prompting people to do that because it's not in their best interest to keep a 1% loan. However, the onus is on the business to request forgiveness.
Okay, so this person is saying that the amount of employees that they had put on their application didn't end up being accurate based on what their accountant said. So they had said 68 that they put on their application, but after checking, they found they only have 59. They're wondering if they need to amend the application, and if so, how they could do that.
Yeah, good news there, I think. I think they're in a large boat with a lot of other people. Nobody really knew what the definition was of an FTE at the time of that application, and people answered it in wildly different manners. Now, there is a point, I think, on this loan application where you have to put that number down, but it's not used in any of the calculations. You now get to go back and accurately calculate what your FTE were according to the rules as published during the time frame that you pick as your base period. So you can pretty much forget about that number. It's not going to impact you.
Okay, so this person is asking about what some of the stuff that they could include in the forgiveness. So they're asking about rent for equipment, credit card, car loan interest, some of those things that are kind of out of the ordinary potentially.
Yeah, so the guidance is actually very, very clear. We talk about payroll and payroll associated costs. So where we include 401k, we include workman's comp, we can include vacation and things like that. Now that is the 75% portion, which is pretty clear. The 25% portion, there's still some nebulous information out there, but it talks about rent. Doesn't say rent of equipment, so we don't know if that's going to be.
There actually is language in the most recent guidance, and I'm going to read it to you. It says payments on business rent obligations on real or personal property under a lease that was enforced before February 15th. Real or personal property, a business lease. So you can include that.
Good.
So.
Yeah,
No,
and then of course the other costs are utilities. So when we start talking about interest on credit card debt and stuff like that, that is not in the calculations. But thanks for the clarity there, Dan. I hadn't seen that.
Yep.
Okay, then there's a question about the idle advance. They've heard that you can't use your idle advance as a grant if you've used your PPP. Is that true?
You're gonna have to pay it back or take it as a loan. It's interesting because the loan application doesn't make that calculation. It's not in there. I keep looking, saying it's got to be there, but it's in all the language and it's in all the guidance and it's written everywhere that if let's again make easy numbers. It's sometimes easier. You receive $20,000 in a PPP and you receive $5,000 in an idle advance. The maximum amount you're going to be forgiven for that PP is $15,000. So they're not going to forgive you the portion that they gave you in the idle advance. So that $5,000, your choices are you pay it back when you apply for forgiveness, or you keep it as a loan and you pay it back according to the terms of that loan over the next 2 years.
Yeah, the nice thing is the idle advance rolls into the PPP 1% loan, not into the 3.75 idle loan. So there is some good news there.
I'm going to throw one more thing in here too, and this is opinion only, and so seek your own guidance and your own counsel. I listened to a very prominent tax attorney. There's been a question about, some people think it's to their advantage to keep this PPP money as a loan and use it for ordinary business purposes that might fall outside the definition of what the purposes are allowed in the PPP loan forgiveness. There's really been a question, and I know that our office has sent that question up to the SBA a number of times looking for a specific answer. And to the best of my knowledge, they have not received a specific answer. But the question has been, so what can I use that for? If I don't use it for payroll and rent and utilities, can I use it for any business purposes? The advice of this prominent national tax attorney was that after June 30th, there's limitations on what you can do with it June 30th. After June 30th, if you have PPP money that's not forgiven, so it's a loan to your business, you can use it on any expense that you choose to use it on. Now, we've asked for that specific several times to the SBA. We haven't gotten that. So that's one opinion that's out there. It is a pretty prominent person who rendered that opinion. So I give that to you for what it's worth.
Okay, thank you. So there is a question about tips. They're wondering if they should consider tips from previous periods. Do they consider them in the 8-week period as well?
Yes, tips, all forms of it's cash compensation. Yeah, so that gets to the age-old question for all my restaurant friends, and I've been a restaurant person for a number of times. Yeah, that means declared tips. You can't go back and count tips that you haven't been declaring. And of course, you should be declaring every penny in tips that everybody makes. But yes, declared tips are compensation, both historically and in the current period.
Okay, so there's a few more clarifying questions about owner employees. So they're wondering how to define the amount they made. Is that per your tax return, the average of your draws from the company? And then there's also a question about, are the members of an LLC reporting taxes as an S Corp considered owner employees?
Yeah, so there's a lot to that question. So when most people applied for their PPP, how they applied as an owner operator was different than the rules have been put out 2 weeks ago. So this is what has caused a lot of confusion, where people were using the amount that they were drawing last year. Banks took that, gave them money in PPP. Now the guidance is specifically, it is based on what is showing up on your tax returns for last year. So if you are an LLC, a single member LLC, you would use a Schedule C, would be on line 31. There are some stipulations about depreciation that could change that number some. On a partnership, it's going to be on your 1065 form, line 22. Now, if you're an S Corp, the rules are the same unless you are paying yourself as a W-2. And then that muddies the waters some, because your W-2 wages are what they are, and your profit on the bottom of your 1120S is what it is. So you have to look at both of those. And if you're in that situation, I really would, maybe contact us offline. We'll talk about your situation in particular, or contact your accountant or CPA, because S Corp muddies the waters if you're still doing either guaranteed payments or draws under S Corp election.
I mean, I would, and maybe Jamie can send this out afterwards. We were going to mention that there is a free forgiveness calculator that is available that we think is pretty good. Your eyes are going to roll back in your head. It's not easy. It's a lot of work, but it's work that you have to do. But we can make that available. I mean, the language that Brian and I are referring to is all public information too. We can share that link with you, and there is very specific language on exactly how and what document Schedule C filers and general partners have to use. And we'll share we'll share the link on the document, but if you want to write this down, I'll save you some time searching for it. It's on page 11 and it's item 3C. Page 11, item 3C of the document that we'll share a link to.
Great, thank you. I put it in the chat bar as well, and we will include the link in the follow-up email tomorrow. Okay, so some people are wondering about what they can prepay. So one person is asking about health insurance benefits. One is asking about vacation and sick leave. I guess, any thoughts on that?
Yeah, we do it, but I'm pulling up my notes here because there's still some confusion.
So while Dan's pulling that up, I just want to let you know that I've been looking at the questions also, and give Jamie huge credit, because I have 7 pages of cut and pasted questions from this list, and we'll try to answer some of those after this. And again, not to take away, because I want Dan to be able to give that answer. But for those of you who have had some difficulty with the sound, Jamie mentioned that in the beginning, but just know we did see your comments. It is recorded, and you know, in these technological times, sometimes it's the, you know, it's the internet, it's the platform, it can be multiple things. We're seeing recordings just fine. So you can go and fast forward the recording and get those like snippets that you may have missed that Brian and Dan may have been talking and popped out. So you won't lose those good nuggets of information. So don't worry. Just wanted to let you know that we do see that.
So prepayment of obligations, Brian had in our original notes for this presentation that we really don't know. And the truth is, we really don't know yet. And I'm gonna give you my thoughts and what I've seen in the documentations on this matter. There's one section in this in the new guidance where they specifically show you how to calculate incurred costs that you pay outside the period, and they show you how to include that and specifically what the calculation would be. They don't say anything in there about prepaid. There is in one section of the document a line item that specifically says you cannot pay interest in advance. You cannot prepay interest. It says it very specifically, interest cannot be prepaid. It very specifically doesn't say anything about any other expenses, which if I was a loophole guy looking for a loophole, I would say, look, you specifically called out interest. If you meant the other ones, why would you have not specifically called them out? So the truth is we really don't know. I think there's a strong argument to be made that since they specifically called out interest, they would have specifically called out rent and health insurance and other expenses if they meant to call them out, and they chose not to. So that's the best advice I can give you, is that we really don't know, but there's an argument to be made.
Great. So I know there's been a ton of information changing with this. So there are some people asking where the best place is to go for updated information and when these changes come out from the SBA. And I will say, from the SBDC perspective, we're trying to get this stuff out as soon as possible, and there are tons of places that are trying to get this information out. But Dan and Brian, if you have any insights into other places you've been looking as well, that might be helpful.
Yeah, well, I would say other than going straight to the SBDC websites, you can go straight to the U.S. Treasury website. They're putting in, I mean, they're the ones that are making the rules and putting the guidance, and they have a blow-by-blow thing when you go onto the Treasury website that tells you, here was the rules when we opened it, here was the rules a week later, and so the Treasury website, although it has gotten extraordinarily verbose, all the information is there.
Yeah, I mean, we check it daily to see what pops up. My expectations are dwindling that there's going to be much more guidance coming out. Maybe there will be, but I think that we're pretty much at the tail end of that. And reading through all of it is not an easy task. Brian and I both had hair before this started. Well, not really, but
yeah, and honestly, for owner operators, it really kind of makes the hair in the back of my neck, what little there's left, stand up with what they've done with owner operators. I would encourage any owner operator that is affected adversely from this to write your congressman and see if maybe the U.S. Treasury will change the rules. Pull out all the stops, because right now I believe what they did was try to make it easier for people who were doing guaranteed payments and or draws to come up with some evidence of proof. Oh, we'll just use what you had for 2019. I just don't think that they're business people and understand how that affects you. So I think if we can bring attention to that and light to that by writing your congressman and saying, hey, this is killing me. This is not how my loan was originally calculated, and we need a change in this rule. Hopefully, with enough voice, we can get some movement on that.
I'll throw in too that the link that Jamie is sharing and will share for this calculator, it's by one of the large accounting firms. I forget who off the top of my head. They'll certainly be credited when you get that link. They're doing a good job trying to keep this updated. So when you go to that, it's an Excel spreadsheet that you can download, and it's going to say it's been updated for changes through this date. you start working with the most current one, but if a week goes by and you want to update your calculations or look at things, I would go and make sure you have the most current version, because they will change it as new information comes out. And I think they've done a good job of the straightforward things. But then there's these gray area things that we've talked about, like prepaid expenses and things like that, retirement accounts, that they're gray areas.
All right, well, we're right up on time now. So I think, I'm sorry we didn't get to all the questions. There's a ton of them, so we will continue to follow up. As I mentioned, there are 15 SBDCs across the state. So if you're not located in Boulder, we do encourage you to go to coloradosbdc.org to find one that's nearest to you. Dan and Brian are both excellent consultants with us, so we're happy to get you connected for your particular situations. I know there's a lot of you who have a lot more questions. So thank you all for attending today. I'm sorry if you did experience those audio issues. We're going to get this posted as soon as possible and do the follow-up tomorrow. Anything else, Susie?
Well, thank you, everyone. Good job. And again, we'll do our best to try to answer your questions. Thanks so much.
Good luck, everybody.
Thanks, everyone. Bye.